Hi, welcome to the Market Alert for Wednesday, 13th of June 2018. So yesterday in the pound, market trading below the 50 bar average, then breaks the 20 bar, heads down to the psychological level of 133.50. As I said in yesterday's Market Alert, keep an eye on this level. The market then tested. It then saw some profit taking by the shorts, and we had some more selling there trying to get the market to the downside. But notice the price action. The market comes off the low of this bar back above the psychological level, and then we see the dramatic rise straight through the two averages. And the reason for this is very simple. As I've said before, if you're short in this part here, you will get out if you are forced out. Your stop is there, and the short squeeze, as it's known, sees the market move higher, and that's why these bars are less in range. As the market approaches this psychological level here of 134, you will see that the market comes off the high. A bit of selling pressure there, tries to drive through, and this is when those that were squeezed here are getting in here, but it's too late. And then we've got the news out as well, and the news came out, unemployment figures for yesterday, and we did see a change in the count numbers. You see here that we came out at minus 7.7 when they were expecting 11.3, and this is why you see this bar here. That's the news hitting the market. Prices tried to stay above. They were above for the next three price bars, but then closed below, down to the DP level, tried to bounce off these, and then closed back below both averages with the signal, and the market back down to, you've guessed it, 133.50. And then in the afternoon, when the US market came on board, the dollar moved lower, sending the pound straight up by 50 pips there, and we've got a double top situation going on here. As soon as it closed back below it, we move lower, and as we move across to see what's happened on the overnight, once again keep an eye on this psychological level of 133.50. The moment the market's below the DP, which is a short sign that the market is slightly bearish, and below the two averages as well, and also struggling with the close of yesterday as well. In the daily chart, as I've said, I would expect this to be a dead cat bounce that we've seen recently. I'm just going to draw this trend line in now as the market has moved lower. It's still below the 20 bar average. It's broken the trend line that we've had in place there, and we've got our downside target of 132.68 should the market break that 133.50. So again, we'll see what happens there. Meanwhile, on the news front, we've got a lot of news out today. We've got the CPI out for the UK. This is out at 9:30. This is the year on year. And then the big one for today, I'm going to go through all of these others. The other ones are out at 1:30. The important one is this one at 7 p.m. This is the FOMC meeting minutes. They are live for today's meeting. They have them every quarter, but things are about to change on that. But the forecast is to go from 1.75 up to 2%, another increase. The Fed have only increased rates at their quarterly live meetings, but as it says here, dollar spikes. When we saw the dollar spike yesterday in the pound, that was because of rumors that Powell wants the press at every FOMC meeting, and that being the case, it will be interesting to see if he continues to increase by 1/4 of a basis point each month. You see, they know that they've got a problem. Their spending's up already 500 billion in the first. Where are we? By the second quarter of this year, and it's a case of they know there's a major problem with this. They know we've got the debt problem. We know there's going to be a recession coming down the line. They know there's going to be a financial problem. So the best thing to do is to get rates as high as you can, so you can actually reduce them to, again, give this false illusion that we had last time, that if you drop the rates, then the people will be able to cope with the recession. It's complete and utter BS, because this is going to be different this time when it does eventually crack and break the financial system. And in the Dow, well, this didn't really do a lot yesterday, but you could expect that as the market waited for the FOMC today. We see selling, we've got buying pressure here as we put the brakes on towards the 25,600 level. Market tests, it bounced back, we get a double bottom test there, and well, actually more of a triple, because we came back to here as well. We've got resistance there, channel. The market eventually breaks out. Where does it trade to? The 25,350 level, and then makes its way all the way back. Once it breaks back through the DP level there, you can see there, once it breaks through there and below the average, and the market then moves all the way back down 100 points before the close, down to the 25,250 level there. And in the daily chart, you can see the market sideways, waiting for the Fed. You'll see that there, break to the upside, 25,503. Be interesting to see what happens today. I would imagine that the rates are going to be increased to 2%. It will be interesting to see how the market reacts to this. I suspect that it's likely to do this, but eventually the novelty is going to wear off with all of this, and we're going to see a resumption of the market moving back to the downside once we get back towards the all-time high that we see over here. Just bring that down a bit. There you can see there, 26,701. But at the moment, the market maintaining this uptrend, and what I would be inclined to do is just let's just do this. We've got the market moving higher. Let's just go off the low of this bar, and there you can see that we're just slightly weaker there. It needs to close back above there. Let me just zoom in on this and have a closer look, make it a bit more precise. Yeah, at the moment we've got the market just breaking out of that upward trend, but we are sideways at the moment, so we'll see what happens today with this. It's quite easily get back inside of this and move to the upside. And then finally we've got Bitcoin, which has taken another hammer in. That's why I've got these downside targets drawn up. We've been looking at these for some time now. Yesterday trading down to the 6480. We're going down to 5855, no doubts about that, and I've even included a weekly chart today, so you can see exactly where we're going. 6198 is the 76% retracement drawn from here up to here. That brings us down to here, and then the low of this bar back in February, I think. Let me just check when this was. Yeah, February. You can see there we've got this low, which is 5855, and after that we've got one over here which I missed. Let me just draw this one in, and that one at 2940. So again, let's see what happens. At the moment this certainly on the short side, also below the 20 bar average and the 50 bar moving average as well. As we head towards the 6,000 level, really is going to be the test, and then that dip below that we saw in February, 5855. And in the smaller time frames, as in 60 minutes here, let's just do this, and you'll see since the market broke to the downside, we have remained below the DP each day. Yesterday, and at the moment got DP there, and yesterday DP. So you'll see that the market is confirming its bearishness at the moment, below the 200 bar average, below the 50 bar average, oscillating between the 20 and the 50 there. First time back above it there, but soon made light work of that and sent it back to the downside there. Right, that's it for this one. If there's anything to report, I'll let you know. But keep an eye on Powell at 7 p.m. and see if we are going to get a live press conference after each FOMC meeting. But we won't know about that until next month, when Powell decides whether he's going to or not. But it'll be very interesting if he is. I can see what he's getting at there, and that's to try and get rates up as fast as he can so he can drop them when it all hits the fan. Right, that's it for this one. As ever, thanks for watching. See you in the next.